Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham, and we thought we'd come to you with a brief market update, kind of let you know what's going on out there. I've seen a little bit of volatility over the past couple of days. The S&P 500's currently just a touch below 4,200, right at around 4,185 as I speak to you. And that really came on the heels of Wednesday, the FOMC decision on Wednesday, or commentary on Wednesday around interest rates and potentially tapering the Fed's balance sheet and whatnot. Just to give you a little bit of a recap, the FOMC meets and issues these statements basically quarterly. In the March statement, they had basically indicated that they did not think they were going to raise interest rates until the end of 2023, maybe even 2024. And in this most recent statement, they basically said that they expected a 50 basis point increase in interest rates, or 0.5%. By the end of 2023, and that they also expected to potentially have a conversation about tapering the Fed's balance sheet or tapering down purchases in the Fed's balance sheet kind of by the end of this year, candidly. I think that this is that the market reaction is a little bit overblown. Let's just keep in mind that the market as a whole has dropped maybe 2% off its overall highs. It's making a lot of news headlines, but the movement itself really isn't all that large, particularly in the context of historical volatility. And the interest rate changes and the balance sheet tapering that we're talking about really isn't even all that large either. We're talking about 0.5% over the next 18 months. Just to put that in context, 18 months ago, the virus wasn't a thing. So it really is quite a long time frame to be talking about, kind of gradually raising interest rates. No real reason to see the economy put the brakes on just yet. And the second thing that I would say is that when they came out and talked about balance sheets tapering, they were very explicit on indicating that they would give the market a lot of time to sort of adapt to and adjust to the message of tapering. And tapering is something that the FOMC and the Fed has experience with before. And they managed that transition well. There's no reason to think that they wouldn't manage this one very well. I will say that, it does give something, people, particularly the CNBC folks, something to talk about, the Bloomberg folks, something to talk about. And so, they're in the business of selling advertising, so they're going to talk about it. It's not something that really gives me a whole lot of concern because the reason why the Fed is talking about this type of action is because the economy continues to grow at an incredibly fast rate. And I would remind folks that, if you rewind the tape back to the end of 2019, we saw a similar conversation around the Fed potentially raising interest rates. And there was a real question of whether or not it was too early, whether or not the Fed, by raising interest rates, might be sending the economy into recession before, the growth, the sort of positive feedback loop of growth had really kicked in. Here, that's not the question. The question is really whether or not, exactly how hot the Fed wants the economy to run. And so I think there is a little bit of a shift in tone coming out of the Fed in terms of saying, okay, look, we're not going to let the party run forever. But this is not a situation where I think any market participant thinks that the Fed is about to jump in and kill the economic rally before it starts. All eyes are clearly still on that unemployment rate, which remains stubbornly high at 6.5%. And I really do think that the Fed will continue to be focused on employment as opposed to inflation in the near term. Longer term, they're just reminding us that once those unemployment numbers get back down, that they will be looking towards inflation with an eye to sort of cool off the economy and cool off those price rises. So with that, if there are any questions, always feel free to reach out to myself or to your advisor. I hope you have a wonderful day, and I look forward to talking to you again soon.
Are you enjoying this content? Please subscribe to our YouTube channel or follow us at RFG Advisory on Facebook, LinkedIn, and Twitter. Thanks.